My dear students, you have already come to know that there are various areas which a company may consider before establishing their new industrial unit or undertaking for minimizing the tax liability. In the last session, you have seen that the company can enjoy the tax incentives and tax deductions for their new business if established in a specified or notified area. Notified area or specified area means, as per Income Tax Act, they have been defined as the special economic zone, or it may be a backward state, or it may be a rural area, or it may be a state of northeastern region of India, or it may be any notified area as declared by the Income Tax Authority. It may be NCR, that is National Capital Territory. So, if such companies established their new unit in specific area, they can get or they can enjoy the tax benefit, which you have seen in the last sessions. In this session, we will be discussing the nature of the business. That is, if the business or if the company is engaged in a specific business or in a specific activities, they can also enjoy certain deductions and incentives. These are way or permissible way by which the company can minimize its tax liability. Here I have identified certain items which are expenditure linked incentives or deductions. You can find that investment allowance 32 section 32 AD. You can find that tea or coffee or rubber development account under section 33 AB, or you may consider also the site restoration fund. As per section 32 AD, a corporate assessee may get the investment allowance. It is in addition to the depreciation allowance under section 32. But to get certain advantage or to get certain deductions, all has to satisfy certain conditions. So, as per section 32 AD, the corporate assessee has to satisfy the conditions, certain conditions, to get the advantage of the investment allowance of section 32 AD. What are the conditions? It must be engaged in manufacturing anything or article on or after 1st April 2015. So, this is a primary condition, that the company should manufacture anything or article. We are discussing here about the nature of the business or activities of the business. So, such company can avail the deduction of section 32 AD if it produces anything or article on or after 1st April 2015. And this is secondary, that is, the undertaking is set up in a backward areas of Andhra Pradesh, Bihar, Telangana and West Bengal. The third and most important condition is that it should purchase the plant and machinery in between 1st April 2016 to 31st March 2020. So, in this period, the company has to purchase the new plant and machinery and to be installed. What would be the deduction? Here the 15% of the cost of the plant and machinery to be allowed as deduction. So, the quantum of the deduction would be the 15% of the actual cost of the plant. In which year it will be allowed? The year in which the new plant has been installed. So, please keep in mind the condition. What are the conditions? The first condition is that it should manufacture anything or article on or after 1st April 2015. Number 2 condition is that it should purchase and install the new plant in between 1st April 2016 to 31st March 2020. If the company satisfies this condition, the deduction will be allowed, provided the company has established the business in the notified area, which I have mentioned. But all the plant and machinery is not allowed, will not qualify for this deduction under section 32AD. What are the plant and machinery excluded here from the purview of section 32D? Any second-hand machine. Second-hand machine means any plant and machinery which has been used either in India or outside India by other person. Number 2, the plant and machinery is installed in office premises or residential accommodation including the guest house, or any vehicle or any ship or aircraft. The last one is any plant and machinery, the whole of the actual cost of which is allowed as deduction in computing the income chargeable under the head profit and gains of business or profession. So these machines, this type of machine is excluded from the purview of section 32AD. If the business is set up in the notified area and if it produces anything or article on or after 1st April 2015, then it may avail the deduction provided the plant and machinery has been purchased and installed in between 1st April 2016 to 31st March 2020. But certain plant and machinery have been excluded from the purview of the section. Remember that the deduction would be 15% of the actual cost, and in which it will be deducted? The year in which the new machine has been installed. So this is all about section 32AD. Then we may consider another section 33AB. What is provision of the section 33AB? If an SAC is engaged in carrying on business of growing or manufacturing tea, coffee and the rubber, it may avail the deduction under section 33AB. So we are considering the nature of activities, nature of the business. What type of business they are doing? Here we are considering the assessee is engaged in growing and manufacturing of either tea or coffee or rubber. That is the plantation industry. That is the plantation business. Such type of business means the business which is engaged in growing and manufacturing tea, coffee or rubber in India. They can avail this deduction under section 33AB. So what are the conditions? Number 1, the business is engaged in growing and manufacturing tea or coffee or rubber. And number 2, it has transferred a certain amount to a special account with the NABARD or any approved scheme. Who will approve this scheme? In case of tea industry, it may be a tea board. In case of coffee industry, it will be coffee board, or in case of rubber industry, it may be rubber board in India. So the board should approve the scheme. If such type of business transfers any amount to the special account maintained with the NABARD or a special scheme as approved by the respective board, then the amount so transferred to the specific account or special account will qualify for deduction. But you have to consider here two amounts. Number 1 is the aggregated amount deposited in the special account or scheme, and 40% of the profit and gains of the business before claiming such deduction, whichever is less. So you have to consider two figures. Number 1, the amount so transferred to the specific account or scheme, that approved scheme, number 1. And number 2, the 40% of the profit and gains of the business before claiming such deduction under section 33AB. So, least of the two will qualify for deduction. So, what are the conditions for section 33AB? The business should be engaged in growing and manufacturing either in tea or coffee or rubber, and it transfers the amount to a specific account with the NABARD or a special scheme as approved by the respective board. If such type of business transfers any amount, then the qualifying amount of deduction will be least of the two. That is, the amount so transferred to the specific account and 40% of the profit and gains of the business before claiming such deduction. We are discussing on the basis of 2019-20 assessment year. So, this is the section 33AB. But in this case, you have to remember the amount which is created with the special account will not be permitted to use for any other purpose, mind it, and should not be withdrawn other than two circumstances: if the business is closed or if the business is liquidated or company is liquidated. So, in the following two cases means the business is closed and the company is liquidated. In these two cases, the amount may be withdrawn or account may be closed. But if the amount is withdrawn from such account, from special account, other than the specific purpose, the entire amount will be treated as deemed profit for the year in which it is withdrawn. And since it is deemed profit, it will be taxable accordingly. So, remember here, the amount so created in the special account cannot be utilized for any other purpose. If any amount is withdrawn for any other purpose means other than the purpose for which it is maintained. In that case, the entire amount would be deemed to be the profit of the business, and it will be taxable in the hands of the company in the year in which it is withdrawn. Again, the amount was withdrawn in a particular previous year for the specific purpose for which it is created. It is okay. But a certain amount is remain idle, is surplus. Then what would be the effect for the surplus amount? In this case, the surplus amount would also be treated as the deemed income or deemed profit, and accordingly it will be chargeable to tax. So, here two things: the amount cannot be withdrawn from the special account for other purposes except two cases. Except two cases means in case of closure of the business and in case of liquidation of the company, it cannot be withdrawn. If the amount is withdrawn from the said account, the entire amount would be treated as deemed profit or deemed to be profit of the business of that previous year, and since it is profit, it will be taxable accordingly or chargeable to tax accordingly. So, this is section 33AB. 33AB is meant for the business, for the assessee who are engaged in either tea or coffee or rubber business in India, that is in plantation business. Then we may discuss another section, the provision of section 33ABA. What is the provision? As per section 33ABA, the assessee is to be engaged in the business of prospecting, extracting or production of petroleum or natural gas. So, we are considering the activity, the nature of the business. if the business is engaged in such type of business means in prospecting or extracting or producing the petroleum and natural gas, then they can avail the deduction under section 33ABA. But simply nobody can claim the deduction, the incentives under the Income Tax Act. It has to satisfy certain conditions. Important condition is that such type of business has to make a deposit in a special account with SBI, State Bank of India, or has to create an account, namely the site restoration account, under the scheme approved by the Ministry of Petroleum and Natural Gas, Government of India. This is the most important condition to avail the deduction. So, to get the deduction under section 33ABA, the assessee has to make a deposit in a special account maintained with the State Bank of India, or may create a site restoration account under the scheme of Ministry of Petroleum and Natural Gas, Government of India. If it fulfills this condition, an amount of deduction will be available under section 33ABA. What would be the deduction? There are two figures you have to consider. Number one is the amount deposited in the special account with the SBI, or 20% of the profit of such business under the profit and gains of business or profession, before claiming the deduction under section 33ABA. Whichever is less will qualify for deduction. So, you have to remember, you have to keep in mind these two figures, the amount so transferred in the special account with the SBI, or 20% of the profit of the business before claiming such deduction. Whichever is less will qualify for deduction. So far we have discussed the provisions of section 32AD, which is related to investment allowance, 33AB, that is tea development account or coffee development account or rubber development account, and 33ABA, which relates to the petroleum and natural gas. 32AD is meant for the assessee who manufactures anything or any article on or after 1st April 2015. 33AB is meant for plantation industry. 33ABA is meant for the company who are engaged in petroleum and natural gas. So, we are considering here the nature of the business or nature of the activities, on the basis of which the company can get the deductions. Hope you have enjoyed the lecture. Thank you.